Everybody's running to gold for a reason. In a time when the Federal Reserve is no longer the main source of liquidity, countries have two clear choices. They can make bilateral deals in their own currencies, or they can turn to gold, which has been used as a safety blanket for centuries. In this video, I'm going to talk about the who, why, and where global gold rush, where it's heading, and why there's a lot of players and currency being spent to secure it. Let's talk about this. So if you guys want to see more of these short yet informative breakdowns, then make sure to subscribe and click the bell notification, because my goal is to bring you up-to-date information on what's happening in the monetary system. And of course, gold is at the center of it. All right, so everybody knows that in the wake of this global liquidity crisis, there's a clear and undeniable move away from the old dollar standard. Gold shine is getting harder and harder to resist, and countries are embracing this old metal with more passion than at any time in this century. And this chaos is just getting started. So what has caused this sudden change? So aside from the fact that one of the preferred mediums of exchange is debt related and the other is a tangible asset mined from the depths of the earth, there's a fundamental difference between the two. Gold is no one's liability, but the holder's asset. Even though this might not be the biggest story in the United States right now, many stories from other countries show how important gold is becoming in their national reserves. Take China, for example, the #2 economy in the world. For 10 months in a row, it has been adding to its gold reserves faithfully. This is clearly a part of their plan to stop relying so much on the dollar, but more importantly, for the monetary system they have planned for the future. Reports say that the People's Bank of China added 930,000 ounces to their reserves just in August alone. Unofficially, they have more than 2,100 plus tons of gold in their possession, but we all know better than believe what they're reporting. Some guesses point to a closer figure of 20,000 tons plus. So basically, China is not the only country in a hurry. Last month, institutions from all over the world added a whopping 55 tons of gold to their holdings. The Polish National Bank, Turkey's central bank were among the first to buy. They bought 22 and 17 tons of gold, respectively. Egypt's reserves went up 24% to 125.8 tons, and Belarus's reserves went up by 17.7 million out of fear of the Western sanctions. Even in the Middle East, there seems to be a strong desire for gold. Both the government of Iran and its people are quickly becoming fans of gold. In fact, the amount of gold investments in the country has skyrocketed to 13 tons in the first few months of this year, which is a big jump from the average of the last 5 years. However, there are consequences to adding this much gold in such a quick manner. Countries are now repatriating gold reserves as an insurance of sorts against possible sanctions like those imposed on Russia. Even the IMF has taken note, pressing Ghana to disclose its ongoing gold for oil transactions as a condition for a sizable credit program. And so as the story of this global gold rush unfolds, the story of gold's comeback makes a person wonder. If countries are weaving their safety nets with golden threads, does this quasi-gold rush mean that a new global monetary system is already in place? You know, I talk a lot about the de-dollarization process on this channel, but rarely do I talk about the possible opportunities that come with this type of change. We all know that whoever holds the most gold calls the shots, but how about taking a claim in the companies that bring the gold above the surface? One of the good things is that over the last few months, I've continued to get my weight up by redeeming one Federal Reserve note at a time, but it's not the only way I've been surveying the land for speculative opportunities. As I've mentioned before, it's great to be able to plug in with a lot of interesting business figures as well as mining companies. I've done interviews and reviews on a lot of companies in the past, but there could be, I repeat, could be a real opportunity with West Red Lake gold mines. After all this gold accumulation taking place has to come from somewhere, and it doesn't just appear out of thin air. First, someone has to discover it, then process it, pour it, stamp it, and then deliver it to the vaults. So while doing a little research about this company and the team, I discovered a lot of interesting details that I wanted to share. The first thing that stood out, some of the notable investors. When modern day Midas figures such as Frank Gustra, an industry giant such as Sprott Resource lend heavily into a particular venture, you sit up and take notice. The West Red Lake gold mines trading in the US under ticker symbol WRLGF could be the day's Cinderella story. This company's market cap has increased significantly from 20 million to 120 million, with much of its success owing to an acquisition of the fabled Red Lake mine. The Red Lake acquisition, which is a mine with a legacy of high-grade gold, offers not only a historical treasure, but also unparalleled exploration opportunities on its 47 square kilometer land package. Now, any business is only as good as its leaders, and West Red Lake's management, led by the astute Shane Williams, possesses the kind of knowledge that can only be gained through years of successful underground mining and project development. It's not just about the resources, it's about having the brains and the determination to get those resources out of the ground. And while we're on the subject of resources, consider the Madison Mill. Imagine finding a mint condition vintage car, and that's the Madison Mill for West Red Lake. Not only is it in excellent condition, but it also strategically located in an area where others may require its services, putting the West Red Lake potentially profitable negotiating position. The plan with this company is simple. Stabilize the project to regain market trust, optimize drilling to understand the mine's potential, and then ramp up production. There's an opportunity here for exponential growth with the mill as leverage. And it appears the vision for this company is simple: make West Red Lake into a gold mining powerhouse. And also the figures don't lie either. The previous valuation of $1 billion and a current cap of 66 million that also includes 13 million cash on hand. The upside potential ranges from a conservative 6 times return to an optimistic 15 times return. However, it's not only about the assets or even the management. It's all about the Red Lake area of Ontario is a gold magnet, with current mining giants such as Evolution Mining and Yamaha Gold staking their claim there as well. And at the end of the day, the West Red Lake Gold Mines is not your typical gold mining company. They appear to combine strategic assets, top-tier management, and a golden-friendly jurisdiction. It's where billionaires like Frank Gooster invest, and where corporations like Sprout Resource Lending own nearly a quarter of the company. So here's a thought for all potential investors, or those simply fascinated by the global gold rush. Is it coincidence when the best in the business are heavily invested in a venture, or could it be a possible golden opportunity waiting to be seized? Just something to think about. I just wanted to bring this to your attention. This is not financial advice. This may not be for everyone, but it could be worth doing a little bit of homework on for yourself. Curious to hear your guys' thoughts. Catch you on the next Quick Take.